Right, watch list creation for 10 a.m. We've got the Wall Street Open, and we've got a rally out the gates, pre-market open, plenty of bullishness breaking out in the indexes. We'll just look at those quickly. We've got the NAS, it's run sky high. At the start of the day, it was looking as though we were trapped. Traders trapped above the breakout highs from Wednesday, with prospects of a pump and dump below that level. However, we've had a jailbreak. Trap traders have been let off, and they even got out of break even, or they held on to their position stubbornly, and it paid off for them this time around. But the buyers soaked up the offers, and we've seen a breakout. So the only thesis really that we have, so long as we stay above the level, is for a breakout continuation trade setup. But now we're back below yesterday's highs, the breakout level, fake out high. We can't help but realize that we've got, well, 4 days. We've got 1, 2, 3 days of breakouts consecutively. That could be the recipe for a peak formation high on the day, for a sell-off, a long squeeze to take out the lows of yesterday. We've got a gap between the opening price and the lows that can often draw in a move into stops. So we're keeping an eye on that. We haven't quite got the ideal criteria. Well, no, not really. We've got the Wednesday highs, which could be a stumbling block. Not sure how much support that would give. Certainly didn't act as resistance on the way up, so maybe it won't act as support on the way down. But in any case, it's something to take note of. But there could be a prospect of a short squeeze. So we'll keep an eye on that. It's flipping from bullish to bearish every time we move around yesterday's highs. It's already done well over its ATR. It's some 400 and what was it? Some point 450 points up on the day. So it could be overextended, and we could be due for a pullback, given that we've got 3 days of rise in the market, and we're still quite a way off from last week's highs yet. We've had a stop hunt into the low-hanging fruit, the breakout level from last Tuesday. Could be resistance. And set us up for a short trade later on in the morning. Right, we'll get rid of the ATR panel and leave that as it is. So I'm actually going to stay on the bearish side of things, and I would set an alarm for a break below Wednesday's. I'll just put crossing Wednesday's highs. That would be prospect of a move lower inside of yesterday's value area high again, for a rerun to the downside. You can see the indicators picking up on that thesis also. It's a 1-star setup, counter trend, fake out high, continuation to the downside every time it crosses below that level. Fake out high, continuation, high of day setup. It's a 1-star setup. Again, Wednesday's highs are support. I would be cautious of that. All of that as potential support, a supporting area. If it proves a support, then it could flip and we could be sent the other way up towards last week's highs. Glancing over at the US 30, we are in an uptrend. It's warning us that it's a uptrend out of 3 days of breakouts. So it's a neutral uptrend, cautioning chasing the move. Um, da, 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 da. Sorry, losing my train of thought. Same scenario on the NAS. At the moment, it's a trend trade to the upside. It's broken out of yesterday's highs. So similar scenario as the NAS. We'll just look at the chart. So again, breaking out. This is more bullish than the NAS in that it coiled. Well, I wouldn't say it's more bullish, but it's certainly a coil that could continue. Fake out low on the week, followed by a breakout. So breakouts are certainly one, two. Today is the third. Let's have a look at this on a candlestick chart. Yeah, so I would say this is somewhat more bullish because today is the third day. Well, yesterday sort of broke out marginally, but for me, we've got fake out low, one, two. This is the third real breakout for me. So I tend to stick with that out of the coil for a range expansion to the upside. So I'm more bullish on the Dow. And that's fine because quite often you get a divergence between the NAS and the US 30. So this is setting up for a breakout continuation. It was an 8:30 trade setup, in fact, but I don't trade that early on in the day. Let's have a look now at the S&P. Uptrend, breakout continuation, low hanging fruits, exactly the same setup by the looks of things. Looks virtually exactly the same as the Dow. Let's have a look. So we've got the same conditions across the time frames, but similar to the Nasdaq, we had a fake out high, so bullish only above Wednesday's highs. So be cautious if we're shorting back into Wednesday's highs, be cautious of that. Otherwise, breakout continuation above yesterday's highs. Okay, so those are my theses for the indexes. Still got plenty of time until 10 a.m. Let's look at gold, silver. With oil today, we have we've got the rig count later on at 1 p.m. Still got plenty of time to do something with oil if something crops up. Let's look at gold then. So gold uptrend, previous breakout continuation low of day. So with gold, what we're doing here is we're breaking up above the Asian lows, which is generating a bullish signal to go long. In 3 weeks of rise, so a bit cautious to wanting to be go long at the moment. We have still got the last month's highs intact as a target. We're yet to see, have we had a, I know we have, we've had a, let's have a look at that box, that 8-hour box. Hmm. Yeah, the boxes are set on a different time frame. So in fact, we had a setup here at 9:45 to be going long. We've got breakouts, breakdowns of the 8-hour boxes. So we had a fake out low of that previous 8-hour. It's caused a spike to the upside. We're now getting a fake out low also of the Asian lows for the continuation to the upside in what is a dump and pump. You can look at oil. Oil is in an uptrend. We had a first red day. Yes, no, we didn't. No, we didn't have two consecutive green days. So a mixed picture on oil above last week's highs, within yesterday's range. Pumping up above the London lows by the looks of things. Following Wednesday's breakout, yesterday was an inside day. I'd be cautious trading inside of an inside day. I'd rather trade from the low or the high. So I'd keep an eye on oil for a test of the low or a breakout of the high. So considering we're pretty low down, I'll just put an alarm on that. Crossing. And we'll revisit it later on in the day if it starts to move up. If it were to break down, hold at last week's highs, and move back up, that would be a recipe for continuation to go long. So I'm just going to mark it as a potential long, and I'll just put a little reminder to be going long from the inside day lows. Okay, and we'll have a look at silver. Silver is not on my watch list. I mean, it's giving us a downtrend context, reversal low of day, which is what it's doing. But not interested in trading this unless we get back above yesterday's low. So we can put and then I'd want to get back above the Asian low. So I'll put an alarm on that. If we're crossing that, then perhaps there's an opportunity to go long. To the highs of the week. Okay, we'll leave it there. I hope that was insightful. Of course, any of these opinions are for educational purposes only. It's not trading advice. And of course, everything can change on the term of a dime very, very quickly. You need to have both bullish and scenarios and be ready to act accordingly depending on the price behavior at levels and the way the market is set up at the time of day.